have to wait for Albert.
Thank you. Brilliant. So thank you, everybody. And if there's someone who has not yet introduced themselves, it's important for you to say something in this meeting. We're very, it's a nice niche group. So if you could just unmute yourself and say, hey, my name is, and this is my company. I'm giving you exactly 1 minute to do so, if you did manage to do so that earlier. Okay. I'm assuming we got everyone from what I can see. So thank you very much. What I will do is I will just confirm that I can share my screen, which I don't think I should have a problem with. And then I will put it on presentation mode. And then you let me know as soon as you can see it. I hope my screen is visible to everyone. Okay, brilliant. So thank you everyone for taking time to join this Investor Readiness session. It's part of the Kenya Innovation Week. And we want to thank all the partners that have made this possible. It's always a pleasure whenever we are able to engage, and specifically on matters to do with investor readiness. So I'm excited to be here today and really looking forward to engaging with you. So I like to always start with something funny just to sort of set the mood. And as you have seen, we've spent the first few minutes introducing ourselves and at least speaking. I like a lot of interaction. I like a lot of questions. And this is essentially for your benefit. So feel free, whenever you have a question, just raise your hand or put it in the chat. I'm happy to pose and take questions, because the aim is really just to ensure that at least you have taken away something from our discussions together. So this always tickles me. Maybe I just like dry jokes, but you can see, for those of you who remember some of those children or childhood stories that we used to be told, this is Jack and the Beanstalk, and someone is giving him advice about this startup of his, where he says he wants to have magic beans. If you remember the story, it was a family that was a bit hard up, and they went to sell their last animal at the market so that they could get money for food. And then what did Jack do? He met someone who exchanged the animal, I think it was a donkey, if I'm not wrong, for a pouch of magic beans, right? And I remember in the story, the people were not very happy because they were expecting money. So it's just to put that into context. So why do I put this here? Normally, sometimes when you're pitching your business idea, you might see the bigger picture. You might be able to see where this particular business is heading to. But to external parties, including some investors, sometimes, unfortunately, all they get to hear is something similar to Jack and the Beanstalk. So part of the process of investor readiness is, trying to bridge that gap in terms of how do I ensure that I'm able to communicate what my business is looking to do, its growth trajectory, in a manner that makes sense not only to external parties, that's investors, but also internal parties. And I'll explain why. People tend to think that investor readiness is always geared towards the capital raising process. And I want to say that that is only just one of the key areas that investor readiness is geared to. When you think about investor readiness, you think about a party putting in money into the business to help it grow, right? And I always want to start by asking, are there any investors on this call that we have? Please just use the icon to raise your hand. Any investors in this call? I'm just giving you 10 seconds. Click on the button to just raise your hand. It would be great to see you. Any investors in the room? Come on, guys. 10, 9, and 1. No one is raising their hands? Okay, that's very strange, because other than maybe myself and the wonderful team from Kenya, I'm actually talking to investors on this call. They are the people who have put in the first money into their company. So I'm a bit surprised that as entrepreneurs, you're not thinking about yourselves as investors. So you're the first investor in your business. You're the one who has sacrificed your savings, your time, and a lot of your social networks to enable your company to start and get where it is. So whenever someone asks you whether there's an investor in the room, you are an investor. You're the first investor in your business. So the reason I say this is because as founders and managers within our enterprises, we sort of tend to forget that we are the first people who are putting in a lot of effort to make these companies work. And so when we talk about investor readiness, for us as founders, for us as the initial people putting in that social, financial capital, and even physical assets in the business, investor readiness is important for us because we are thinking about, is it possible for us to grow our business? If it's yes, if that's the answer that you have, then how are we going to do it so that we make sure any money that we're putting into the business is actually being utilized to achieve what we are calling scaling? So in short, when someone talks about investor readiness, we now know that there are two aspects to it. The first is for you as a founder, for you as the managers, is how do we prepare our business so that we can be able to scale it? And how do we prepare the team to support the business to grow? So those are two aspects, right? Preparing the business, putting in the necessary processes, giving it the right assets, giving it the right support so that the business can get from stage 1 to 2, and then preparing your team to support the business. Because when you start to scale the business, the way business is normally run tends to change. So what you need to do is ensure that you have a team that is able to take the business to this next level that you need the business to operate at, what we are calling scale or growth. And then lastly, it's about preparing you, the founder, right? And when people talk about preparing founders, they ask, what do you mean preparing the founder? Your business is growing. So the way it runs is also changing. The skills the business needed initially and where the business is going to go to are totally different. So as a founder, you'll find that at each particular stage of business growth, the business requires something different from you. So part of investor readiness is for you to understand in this journey of scaling, how is my business going to change? What are the things and skill sets that the business will need from me as a founder at each particular stage? And at what stage of the business growth will I have to say, I can only do 1, 2, 3 things. I need to bring people on board to do 4, 5, 6, right? Because sometimes you might hear a story of a founder that cripples the business because the business is growing. It's like a young child. When the business was small, it's like a baby you're holding, you're able to carry it with you everywhere, things, you can do most things. Then when they start to crawl, you start to realize, oh, okay, they can easily get away from you in a very short while. And then before you know it, they're running everywhere, they can walk, they can make their own decisions. It's the same thing. So you tend to need more support. And if you're not careful as a founder, you might say you want growth, but the way you're managing it means that you actually stifle the growth. Maybe because all decisions have to come to you. You're the one who has to attend all meetings. You're the one who has to sign off all documents. People cannot move from point A to B without your say-so. So there are only so many things you can do in a day. So you end up being a stumbling block. So it's very important as a founder to realize that in the business of investor readiness, and when you're thinking about growing the business, you need to prepare yourself and understand how you can help your business across the various stages of growth. So in a nutshell, what we've said is investor readiness is preparing for two things. One, how to grow and scale your business. And we are saying it's preparing the team and the founder to understand what the business needs to grow. And two, investor readiness is also about the preparation or the process of raising capital, which is what a lot of you will be doing when you go for the the sessions where we are saying, and I think it was Albert who set the scene very well, and he told us there'll be a lot of investors. You might not necessarily meet them when you're pitching, but when you're walking, when you're in the conference, whoever you're seated next to, you're likely to come across someone who can actually help your business. So scaling, capital raising, preparation to scale, and preparation to raise external capital. So I will move on to the next slide. Do we have any questions so far on that first slide? You can always put them in the chat. Oh, yes, thank you, Grace. Jack exchanged the family cow. Exactly. And you can tell that is someone who is doing early childhood development. She has the stories at her fingertips. Thank you so much, Grace. Any questions so far before I continue? Hands up, put it in the chat, let me know. We're good to go. Thumbs up, reaction.
Can I request like everyone to put their startup so that they can be seen for ease of communication?
Brilliant. So guys, please remember, put your name and also put your startup. So you can just put one name in your startup and you can see, yes, most of us have done that. Thank you. Okay, so when you're talking about investor readiness, we said there are two parts. There's a scaling and then there's a capital raising. The first part is really to start with, where are we? As a business, where are we in terms of where we want to go and where we currently are? And the first critical step of investor readiness is really to analyze your business. You want to understand things such as, is a problem I think I'm solving really a large enough problem to sustain this business, right? And people always ask, what do you mean? I'll give you a perfect example. You remember when we all started buying quail eggs a couple of years back? It was all the rage. Everyone was growing quail eggs. You could not satisfy the demand, right? And then what happened? Then we ended up with a glut in the market, you know? So the people who did the first quail eggs made money because there was a lot of demand and everyone believed that quail eggs was able to heal everything in between, right? And then the people who started coming in because they thought, this thing is going to go, it's going to grow big. There's so much demand. What we were paying for quail eggs in the beginning and what we ended up paying for them at the end, totally different prices. And if you go to the supermarkets, very, very few have quail eggs. So what am I trying to say? The problem that you're solving has to be something that is not a trend, right? It is not a trend. It is a sustainable issue. Yes. I can see Brian has also said, yeah, face masks. Guys got into face masks. Some of us are still wearing face masks. Everyone was trying to do and see if they can supply face masks, but the demand is dropping, the price is dropping. And maybe the way you had set up your production, you had thought, if I'm selling a box at least for 300, my production can be XYZ. Now you're seeing boxes going even for as low as 200 shillings, right? So think about the problem that you're solving. How sustainable is that problem? And how large is that problem? Because that is what we are trying to look for. So I want to ask, because each of you are going to be describing the problem that you're solving. And I read a nice profiles, just brief profiles about the various companies. I want you to ask yourself, if you look at your pitch deck today, are you clear about the problem that you're solving and how large it is and who the key target group for you is, right? Because that's part of the process of saying, this is the problem I'm solving. It is not a trend. It is something that I foresee definitely lasting for the next couple of years. So if I'm putting my money, it's to put in my money to solve an issue that I know people will continue to have, and my product or my service actually addresses it. Okay. So I don't know how many of you are on your laptop, so you have your pitch decks closed. I want you to look at your first slide. Normally you have a summary slide of what your problem statement is. And if you look at that problem statement, how many of us have slides that have that problem statement? I'd just like to know For those guys with the pitch decks, please just raise your hand. It would be good to just understand. Anybody? If you have your pitch deck ready, I'd like someone to just unmute and in very brief sentences, explain what the problem they are solving is and for which target audience. And then we can give you some quick feedback. I warned you it would be interactive, but that is what makes this best. Yes, Eric, go ahead. I can see your hand is up. Please tell us, what is the problem you're solving and for whom? Very briefly.
Okay, I was just opening up my slides, but okay, here it goes. Africa is one of the fastest growing continents in the world. And with a growing population, we have an increase in the amount of waste we put out into the environment. So by 2050, we'll have doubled the amount of waste we generate on a daily basis. And because of this, we have a lot of pollution. Landfills are filling up faster than ever, and we're having a huge garbage crisis.
Okay, I get it. I think we've all had what the challenge is, and he's basically talking about the increase in waste. When I look at that problem slide and when I want you or how you're explaining it, what you have communicated is a problem that we are all aware of. The issue of pollution, the fact that we are running out of space to have landfills. So it's actually a problem. In that problem statement, you need to give us statistics. It would help, right?
Okay.
And usually, if you have statistics, because if you tell me we are doubling the amount, what was it before? You know, you can have 1, and then when we double, it's 2. If you tell me you've doubled, okay, but if it's 1 and 2, the numbers are relatively small. So an investor would want to know, when you're talking about the waste is doubling, where are we? How many tons are being produced, right? And we are going to double that over what period of time? So that when you're explaining the problem, I am immediately able to get a feel of this is a big problem. Because if you tell me we are currently producing 10 tons of waste in Nairobi alone every day. So in my head, I'm already thinking, wow. And then you tell me within the next year, for example, 10 tons per day of waste will change into 20, 30 tons per day. And we are running out of space for landfills. I'm immediately able to tell this is a serious problem because I can tell where we are, what the situation will be within what given time frame. So when you come to tell me what your solution is, I'm already seeing there's a clear definition of, this is how the problem will be solved, right? Yeah. Any clarifications from the rest of the participants? Okay. So when you're talking about your pitch decks, it's important for us to understand the gravity of the problem, and it usually helps to have that statistic so that you talk about, and you're not going to put in paragraphs. Remember, when I'm speaking to you, my slide only has 2 very visible buttons because I want your attention focused on me when I'm speaking. The same thing when you're going to do your pitch. Don't go and spread like paragraphs of data, because what you do is you distract people from listening to you to trying to read. Because the moment I see a slide with so many figures, so many things, I'll be thinking this is important for me to read as opposed to listening to you. So from a pitching perspective from the investor side, we've said, when we're talking about our problem, let's put some statistics to help them understand what the size of the problem is, and then let's make our solution clear. So if you don't mind, Eric, I'll just come back to you and ask, so what is your solution or what is your product and how does it help tackle this problem?
Right, thanks for the question.
Yes.
So let me move quickly to my solution slide. So Africa is producing a lot of waste on a daily basis, and our solution is turning that waste into resources that can be, our solution is monetizing the waste that we generate. So instead of the waste ending up in the environment or in landfills, we provide these waste resources to recyclers and manufacturers so that you can close the circular economy loop.
Okay. So what you're doing is you're not necessarily recycling it yourself. You're providing like a logistic service to collect, bail, sort. I guess this is all the stuff that you do to the waste, and then provide it to people who actually undertake recycling, from what I've understood.
Yes.
Brilliant. So there are two things there that I think are very critical for you to actually bring out in a stronger way. And the reason I'm taking a little bit of detail with Eric is so that we can also go back to our pitch decks and see. Your solution is, as much as he's not doing the recycling, we know that the ability to access waste is usually it's a logistical nightmare, and it can be an expensive nightmare. And the problem is the waste that you go to collect might not necessarily be sorted. So what Eric, through the company, is doing is actually providing a value-added service of, as opposed to people trying to find out where they can collect waste from and people trying to see how they can start sorting it, we are providing a service where, through us, we will be able to collect for you the type of waste that you need, sort it out, and then provide you with reliable supply, so that the person who's doing the recycling doesn't have to start worrying, I'm going to run out of my waste material. I already have Eric and company who I have hired to be doing that for me. So when you're talking about your solution, we already know what the problem is. We need to be clear how your solution is helping. So for example, with Eric, it would be great to say, as opposed to just saying we provide, there are certain aspects that are very key. You collect, which is hard to do. You sort, which is also a value-add service, and you're able to provide like a reliable supply for some of these customers that you're serving. So that's just an example. So that's the investor focus aspect. So someone can easily understand, we are always going to be having a waste problem. It's easy to understand what this business is doing. It's easy to understand the service that it is providing or the value add. So in terms of our pitch, when we're explaining, we've already said, what problem are we solving? We've used that as an example. We are solving the problem of the waste that keeps being dumped and is not utilized, by finding a way to actually process it and make it as a raw material for people who can provide other value-add services. So it is for whom? It's a business-to-business support, right? So one of the key things we always say is, when you're describing the problem, there's the aspect of storytelling, right? So for example, using Eric's pitch, he can tell us this is the amount of waste, yes, but he can also humanize the story for us, you know. So storytelling is how are you relaying the information so that you grasp my attention right from the beginning. You can either use personal experience. So for example, if there's a company providing clean water, they can have the first slide that explains the problem as a story, you know, bullet points. Miriam is a mother of 5 who lives in X. Every day she has to go to River Y to collect water for blah, blah, blah. Her children have been suffering from waterborne diseases. They keep missing school, etc., because of the lack of access to fresh water. Miriam is one of 100,000, 200,000 people without access to maybe clean, la, 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 la. Our solution is to, so in that particular aspect, you've humanized it such that I'm able to understand the actual person who is suffering. So the art of storytelling. If you're not also going to personalize it the same way that Eric explained, you can actually do that, right? You can come in and say, did you know over 10 tons are produced daily? This number is actually going to grow. So you're storytelling. So it doesn't feel like you're reading something. It's you're getting us to believe in what you're saying. You're making it like a tangible aspect for us, right? So when it comes to your pitching, and it's part of the aspect of when you analyze your business and how you're able to communicate it, it's simply from that one exercise, we can get what our problem statement is, and we can also get to understand what our solution is. Are we okay so far? Smiley face, thumbs up, or crying face. If I'm not making, if you're not able to follow, please let me know. It's always great to have feedback, or put it in the chat, say yes, no, and if you have questions, please feel free to ask. Okay. So are we okay to move on? In
Can
the
I quickly
chat?
ask a question?
Sure, Girs.
How long is somebody given an opportunity to do the pitch deck?
Usually it's about 5 minutes to make your pitch, and that's why you need to be very precise. I'm not sure what format they maybe, I don't know, Albert or Wanjiru, maybe you could tell us if they were going to do the pitches, how many minutes are they being given per pitch? Okay. We can confirm, but usually what happens is you're normally given 5 minutes to actually do your pitch.
Okay,
and I know, yeah, and I know people always say, it's such a short time. How am I able to communicate within 5 minutes? So allow me to just pick on something that I wanted us to also see today, because it's part of that describing the problem. I want to just share with you a video. So I'll play this for you. Please let me know if you can see the screen. Are we good? Okay. Yes. Perfect. So yes. Listen to this guy. Brilliant. Listen to this guy and just hear how he does a 1 minute pitch. Great.
Over the past 2 years, youth unemployment has been on the rise. It currently represents just under 40% of all unemployment in Australia. Young graduates are leaving university and finding it more and more difficult to enter any form of creative industry. Now, the common stipulation is that you can't get a job without experience, but you can't get a job to get the experience. Now, meanwhile, 42% of small businesses failed in 2003 to 2007, and the figures haven't improved much. Amongst many reasons this is happening is a consistent lack of quality in their branding, marketing, websites and designs. The kind of training that these graduates have just spent 3 to 6 years training for. Now, what if there was an enterprise that bridged these two sets of frightening statistics? I want to build that bridge.
1 minute. Very quickly, please unmute or raise your hand. What are the key things that have jumped out to you as he's described that problem?
For me, was the statistics.
Statistics, right?
Yeah, he used a lot of numbers.
Yeah, you know, so 40% unemployment. Majority is the youth. 42% of businesses are failing. So the statistics, it was not an overload, but it helped us understand. Okay. Thank you very much. Anyone else? What jumped out at you as he was describing his problem?
Well, he made the problem relatable.
Sorry, let me pause that. He made the problem
relatable. It's something that you know, we all know. You know, you need experience to, you know.
Yeah. Sorry. Go ahead. Sorry.
Yeah. He made the problem relatable. It's something we can understand.
Exactly. Exactly. It was very easy to understand. There are people who cannot get jobs, and there are companies that are failing, and the reason they're failing is because they need the skills these people who can't get jobs have, and he's the one who wants to provide or build that platform. Anything else that came out from this particular very short but very impactful? Yes, Wanjiru? I'm not sure if that's an old hand or a new hand.
It's a new hand. I was just clarifying that the pitching time is 5 minutes and there'll be a 2-minute Q&A.
Okay, thank you. So 5 minutes to be able to pitch, and 2 minutes Q&A. This guy did his problem statement in exactly almost 1 minute or less. Okay. So when you're talking about your problem statement, you don't have to go into so many convoluted aspects. It's about what he did was storytelling in a way that it was clear what the problem is, it was clear what the solution is, and you immediately understood this is what the business will do. So you're only left asking yourself, how? So even for you, when you're pitching and you're putting together your problem and solution slides, let it be very clear. What is the problem? How big is it? How are you coming to provide that particular solution? Okay, so I think we can go back to the presentation and allow me to share my screen again. And I keep reminding you, if you have any questions, please feel free to ask. We are here for you, right? So this is what we were talking about. Problem slide, solution. Those are 2 slides. Again, moving on. We, as part of explaining, first of all, remember we are talking about investor readiness, both from growing our business and pitching, right? We need to understand, okay, so where are we going, right? Where are we going exactly? What's the future hold for us? So for example, when you look at your business and you think about 5 years from now or 6 years from now, what is it that you want to achieve? And what you'll find that is there are certain key milestones that you want your business to be able to achieve, right? It could be get another product, get into a new region. If you're in Nairobi, you want to go to Nakuru, or if you're in Kenya, you want to go into Tanzania. So you have certain milestones that you want to achieve. And one of the things we always say is we tend to underestimate the sort of resources we need when we need to achieve those milestones, because everyone is always thinking cash, but cash is only part of the solution, right? And the interesting thing about cash or capital, people tend to think about, I need to raise funding, but your business is already running, right? Your business is also generating cash. So an investor is not going to come and give you all the money you need for your growth. And that's a myth I think we need to deal with. People tend to say, I am raising, say, $5 million. Okay, brilliant. So how soon do you need this money? I need it within X, number of months or within the next year. Great. So my question to you is always, the business is still generating money, ideally. And if it's not generating money, there must be a way that maybe it has certain savings from you as an entrepreneur that, or you might have gotten a grant to sustain you for a certain period of time. Always ask yourself, how long can I stay without access to this external funding? It's an honest conversation to have with yourself. If I don't raise money in the next 1 month, will my business still be here? Are there things I'll still be able to do? If I don't raise money in the next 6 months, what is my business going to look like? Talking about external funding. And what will I be able to do? So people keep talking about, you keep hearing about our runway. That description when you're talking, especially with startups, you like to say, I have a runway of, or to give me runway. It means essentially, how long can you survive without that external funding? Because as we know with fundraising, it's not necessarily going to be predictable in terms of how soon you can close. You can even get to the term sheet stage, but then because of certain delays, what happens is you're not able to raise the money. So ask yourself, how long can my business stay if I'm not able to raise that external funding? So understand what your runway is. Secondly, understand, as part of this growth, that money that I need, what can my own business, from the money it's making, plow back to support certain aspects? Then what is it that I need an external party to come in and fund? right? So when you're thinking about your business growth, it's important to think about capital, both from internal sources and external. A lot of you will think that when you go to investors and tell them, if you don't give me money in 5 months, the business is going to close. What's the investor going to do? They're going to say, hey, then that's not a business I want to invest in. Because if it's only my money that's keeping it working, then there's a fundamental flaw with the business, right? So another thing that you need to think about is human resource. A lot of you tend to assume that when you talk about expansion and scaling and growth, you tend to forget how much you do as a founder. The amount of decision making, the amount of work you actually put into your business. So that when you say, I have my HQ in Nairobi, I want to do a HQ in Dar, you only think about, okay, I need someone in Dar, brilliant. What is a person in Dar going to be able to do? What is it that you currently do here in Nairobi that the person in Dar cannot do? It could be signing checks, it could be authorizing payments, it could be authorizing procurement for goods, it could be authorizing certain additional documents. Have you thought of how when the person is in Dar, everyone always thinks, yeah, we'll do it online. Okay, to what extent can that process be done online, right? Do you have that online system that allows for that sort of ease in terms of some of those approvals? Some of you are saying, I want to go to Dar, brilliant. All your supplier relationships are here in Nairobi. You have come, you have agreed with them, they deliver for you certain things at certain times. That's fine. What about in Dar? And people will always say, yeah, if I'm going to Dar es Salaam, I'm sure they are suppliers. Yeah, but have you talked to them? Do you understand what sort of credit they give? Do you understand that they might not give you that credit term because you're a new company? It might take a while, and maybe their processes are different. Have you factored that in? So those are some of the things that we need to think about. So I'll come back and say, you need to think about the human, you need to think about the financial resources that you need, and also the physical assets when you're scaling, because this is something that you can communicate to investors. And then when you're coming to do your financial projections and say, if I'm going to grow this way, I'm currently doing 10 shillings per day. When I put in this growth, I will move to 20 shillings per day, 30 shillings per day, financial projections. So remember, even as your revenue grows, of course, your costs have to grow, maybe not at the same rate. So make sure your projections can be justified and people can understand how it is that you're growing from one stage to the next. So part of the things that we think are very critical is whenever you're thinking about the growth, there are certain aspects that are very key, and that is the ability to understand your market, understand the industry, right? So the market is the largest sector that you're serving, what we call the total addressable market. It's the size of that market. So for example, if we're going to talk about, say, I read about people thinking about, say, beauty. And the beauty industry, you want to do like an Uber where you can order services. What's the size of that beauty industry, the total addressable market? If you're in Kenya, the size of that. Then we have what we call the serviceable addressable market. This is saying, based on my product, these are the people I think would be interested in my product. Then we have the serviceable obtainable market, the one where you can say, I am targeting this. So a lot of you tend to say, the market is 6 billion, and I think I want to target 1% of that, right? So do the calculation. What's the 1% of the 6 billion? Okay. Are you sure you can be able to reach those people? Investors will want to know, how are you going to reach those people? And is it a realistic target for you? So it's very important for you to understand that. And then competitor analysis, right? We all know this positioning where you're comparing. So for example, it's a positioning map or perception mapping, your brand against other brands, right? A diagram like this, or even in a table format, is very easy way for you to say, this is how I am different. This is what makes me unique, right? So for example, in this one, taste versus health value, this brand is saying, I have more taste, I am more healthy. Those are the key things that it is pushing. The issue of cost has not come here. So very noticeable, right? So what you want to do is provide simple visual explanations of how you position yourself as against your competitors. You don't need to write many things. You can do that in a very simple manner, so that by the time we are coming to do this, what you're saying here is, it is very clear in a very simple format. What do I need at what point, right? So in year one, because sometimes when you're talking to an investor, they will ask you, you want to do so many things. How are you going to sustain? You'll be like, no, I can actually, yes, it looks like a lot, but I understand what I want to do in year one. I know what I want to do in year 2, year 3, year 4. And these are the milestones, right? So year 1 and 2 should be very realistic and tangible, because this is your near future. You're not talking about things that you're not sure of. So you should be able to say, can I achieve these 3 things in year 1? And remember, year 1 is building for year 2, is building for year 3. So that you can say, if an investor says, I think you're asking for too much money, you will come and say, actually, let's look at my milestones. Capital that I need for milestones 1, 2, 3. This is what it will cost me for year 1. These are the number of people I need to be able to achieve that, because you don't raise money and maybe not increase the size of the team to execute unless you already have the people, right? And these are the assets I need. So it is very clear where the money is actually going. And then even for you, when you're raising, if a funder says, if you need, say, 5 million across 5 years, and the funder says, I'm only able to give you $1 million, you as an entrepreneur will come and say, am I willing to take that 1 million to help me achieve these milestones alone as I continue to try and fundraise? Or is it a situation where even if I took that 1 million, I'd still be stuck if I don't have enough funding for year 1 and 2 because of the way they are interlinked? And I know a lot of people always say, hey, even if someone gave me 100,000 out of that 1 million, I'm ready to take it. Sometimes it's a realistic conversation you need to have and say, what will that 100,000 really help me do? And remember, fundraising is a taxing effort. You have to keep putting so much effort towards it. So sometimes you might be able to say, maybe hold on that 100, don't take it. Let me see if I can get another 1.9. Then I combine with your 100 to allow me to at least be comfortable enough to achieve what I need for year 2. So we are not saying don't take the money. We are saying, wait. With that 100, wait, let me see if I can get 1.9 or at least 1.5 so that I'm able to take myself from year 1 to maybe halfway to year 2, so that I'm not always in the process of fundraising. When will you get time to run your business, right? So again, when we're talking about our pitch decks, we've talked about, and you know those circles that are usually there, it's usually nice to have a circle that says, this is a total addressable market. Serviceable means the one I know would be interested in my product. Addressable is the one I'm saying I am targeting for sure, that one. And they need to understand how you're going to reach them, through what channels, right? How do you acquire your customers, right? Is it through digital channels? Is it through sales people? Is it through, how do you acquire your customers? And then it's always important to show, you see these milestones? There are things you have achieved, because even if you're a startup, you're not a blank canvas. There are things, you have a prototype, you've gotten licenses, you've maybe gotten interest from your first client. There are things that you've done. You've won awards, you've won recognition. I think one of the startups was saying they're the first in the world to be fair trade certified for creative agency services, right? So those are the things you'll say, these are the milestones we've managed to achieve. Have it there, because you've done something, and then that perpetual, you remember this, how you compare to competitors. And some of you I've seen, you've said, we don't really have competitors. No. Everyone has competitors. They can either be direct, meaning they are producing the exact same thing you're producing, or they are substitutes, meaning it's not the same, but the problem it solves for your client, The client can use your service or they can use the substitute service. Everyone has competitors. So whenever you write in your pitch, we don't have competitors, what you're telling the investors is, I have not done my homework. I have neither looked, I've only looked at direct, and even with direct, I need to do more research. I have not thought about substitutes. Everyone has competitors. So the other thing to also think about is, for example, for the creative agency, I don't know if there's a representative here. If you can, just raise your hand so that I know that you're around. That awesome certification that you've gotten as a creative agency, you're the first in the world to get it. Brilliant. How are we monetizing it? What's the value it's bringing? Because you're in a very crowded space. So how is that fair trade certification going to help you bring it out, so that it's not enough to say we are the first? Let us understand what that being the first means for you. It should be captured somewhere in your slide. So all this information goes into the slides that talk about your market competition and about your milestones and what you've managed to do. Okay, I will pause here for a minute and just ask if there are any questions. I'll also check the chat. Anyone questions? I'm only here for a few more minutes, so maximize. Great.
I have a question.
Yes, go ahead, Eric.
So mine is about capital. My business we've been bootstrapping to date. We've secured some grant funding to be able to work on a few things in, let's say, building a prototype, in carrying out a pilot. But it gets to a point where you need some cash injection as soon as possible so that you can get to the next phase of closing a customer. So other than that, we still need to fundraise so that we can have enough runway for the next year. So what kind of approach should we be looking at? Getting the initial investors to fulfill this part of the business that needs some immediate cash injection? Or should we just have one fundraising event where we raise money for the entire year?
Okay, maybe I can just start by asking, you currently have paying customers?
No. We have a customer. We have a customer who needs to see a proof of concept. So they need to see a working product. Yeah. So that they purchase 5 products.
Okay. So you have a chicken and egg scenario.
Exactly.
I will buy if you show like an MVP, at least some prototype of your product.
So we do have a prototype, but then being a prototype, it gets to a point where, you know, we have like, let's say 3 downtimes in a week.
Yeah.
But then they want to see a working product, let's say working for a whole month without any downtime. Yeah. But we can't get there without, you know, some cash to build a commercially viable product. Okay.
So in this scenario, what you want to do is you need money to finish your prototype to a second version that is reliable enough for the customer to keep using. And the customer is keen enough to say, I am happy to purchase 5 units, right?
Yes.
You see 5 units, okay? So in this case, what you need to do is get what we call bridge funding for that particular aspect. And the bridge funding can, because it's for a specific purpose, it can either come from either an additional grant, right? Because it's more of proof of concept, or it can come from what we call angel investors, right? And the reason we say that, or it can actually come from what we call alternative lenders. And I'll explain, because that last part can be a bit tricky, especially because you don't already have the income coming in. So your client, if they're serious about this, they can give you what they call an unbinding expression of interest, right? And what that letter will say is basically to any funder that my name is client Y. I am actually happy and interested. I'd like to buy 5 pieces of the following product. I just need it to be like, be able to do 1, 2, 3. Then with that document, you're able to now engage either another grant funder, because you're still in the process of proof of concept. Come in and say, we just need funding to allow us to grow, to start what you're calling your customer acquisition process, because that is essentially what you're doing. And this customer is serious enough. They've given us at least something in writing. They're not saying they're committing themselves like, if I don't buy, there'll be a problem. They're just saying they're keen and they'd really like to have your product, but it has to be able to do 1, 2, 3 things. So your most likely chances of success is a small grant to specifically help you address that client need, because it's more, you're still at the proof of concept stage. And you can also approach what we call angel investors, because they're able to write small ticket sizes and tell them, my company has ability to grow. Remember what we're talking about, what your product is able to do and the problem it's able to solve. I just need X amount to allow me to finish my prototype, because I already have this client interested, and be able to help us service this client for a period of 4, 5 months, right? Because after that, the client will be paying you, right?
Yeah.
So that whatever you're raising is not just to, you're not just raising because the boxes will not deliver themselves, or, your product won't deliver. It needs to be monitored. I'm assuming someone needs to do some sort of checks on it. Someone needs to monitor that. Someone needs to be talking to this client, because as with prototypes, and everyone knows, the first product is usually not very reliable, even the second version. So you'll tend to do a lot of customer relationship management, so that you tell him, I'm here for you, right? So if there are any problems, within 24 hours, there'll be someone on site to fix whatever the issue is, so that they have an excellent customer experience or user experience, even though the product is still in prototype stage and might still have some challenges. So to answer your second question, we tend to advise you start your fundraising always early, so that you don't have the house is on fire situation. Because what happens is it's when you're negotiating from a point of my house is on fire, and think about it, your house is burning and there's someone with water and you're haggling over the price of the water. If your house is on fire, you're more likely to take a more unfair deal, as opposed to when everything is fine and you're not under so much pressure. So we always advise, try and fundraise earlier. And as you'll see, it is a continuous process, in that, yes, you are in a situation where you need some funding. It's important for you to address that, but you also start to need to think of, if this customer likes it, I'm going to have to probably see other people they might ask me for that product. Am I ready to produce at that level? And if I'm not, what do I need in terms of resources? What we were talking about here, to be able to produce the additional pieces, how many people, and you stretch, right? Part of entrepreneurship is learning to stretch your shilling without necessarily affecting your quality. So you try and see how you can stretch. So if it's the human resource, can one person play various roles? One key thing that they're an expert in, and maybe another 2 roles that maybe they're not experts in, but they can tide you from milestone 1 to milestone 2, where you'll be in a better position cash-wise to hire someone else. Okay.
Okay. Yeah. Thanks.
Okay. So you've helped us jump to this, and this is what I wanted to say. When you're thinking about funding, remember we said there's what we are generating, and internally generated funds. Don't put everything back into your pocket. Invest in your business, because if you treat your business like a business, it'll tend to have that sort of growth momentum. If you keep removing money from the business, think about it. And I know I keep using children as an example, but it's like there's nutrition a child needs. If you feed them on a lot of junk, things that are not necessary, yes, they'll be big, but they're not healthy, right? And it's the same way. You can't deny the food and say, no. What I was feeding you when you're 1 year is the same amount I'm feeding when you're 3. The business requires different amounts, the same thing. So make sure you're adequately putting aside whatever revenue your business is making to reinvest back in the business. So when we think about fundraising, people always ask, so who do I reach at what stage? And I think based on what I saw, majority of us are here. So at this stage, when it's early stage, a lot of your own money as a founder, a lot of family and friends will give you that money. As Eric has said, there are a lot of grants that are available. And that's always something to check, especially if it's product development. And like for him in the area of circularity, there's a lot of interest in it now. If you have a viable product, there'll be likely some people who are happy to do the grant funding. There'll also be microfinance institutions. There'll also be SACCOs. So don't be afraid to look for some of those alternative lenders who can come through for you, right, at that particular stage. And also what we're mentioning, angel investors. These are usually people who are saying, as opposed to me going to buy another quarter acre in Kambulu or whatever the newest place is, I am going to use the money for that quarter acre of plot that I'd have bought and put it into a company. So it could be 250,000, it could be $1 million, it could be, you know, sizable. And what they do is an angel investor is either an individual who's happy to put money into your company and they take what you call its shareholding that they take, or it's a group of investors who will come and say, we are happy to give you money to be able to help you move from your current proof of concept again to be able to acquire customers. Remember, at the end of the day, even if they are angel investors, all the things we are talking about, is your problem large enough? Are there people willing to pay? You know, because there are people who can't pay, but they are willing to pay for your product because it's not addressing a key need. I think during COVID, we really learned that, right? Before, maybe shopping lists used to read like small novels. And then after COVID, people really understood, what do I really need, as opposed to what I want. So you need to show that there are people who have ability to pay and they are willing to pay for your product or your service, because those two are usually very distinct things. Ability means I have the money to buy. Willingness means I am happy to pay. So some of you might be thinking, but you know, disposable incomes are this. Yes, but do people want to spend money on your product or service? That's something you need to ask yourself. And how do you know who is your customer? It's a person who's willing to pay for you to address that problem, right? So when we're talking about when you start to go up the ladder and start to become what you call a slightly larger SME, we have now what we call impact investors. And what is an impact investor? It's essentially someone who's saying, other than a financial return, right? I am willing to maybe say, if a bank or is accepting 16%, for example, as an impact investor, I'll be willing maybe to still accept something like 13. So I'm not saying I don't want a financial return, I do. But in exchange for that 13%, I want to understand the impact that you have. If it's people that if it's like, for example, what Eric and team are doing, working to improve the environment by, you know, what's the SDG on circularity, sustainable cities, and is it 11 or something? I'm not sure. You know, are you moving towards the sustainable development goals? If you're in early childhood, are you enabling better education for children? You know, so because of that extra impact you have, or if you're working with people who are at the bottom of the pyramid, I'm willing to take a slightly lower return because there's an additional benefit that your product is doing. But remember, even with impact, it doesn't mean that they are willing to they are going to be soft on the issues of impact. A lot of impact investors will require impact reports, right? So it's not for you to just say, we impacted 12,000 children. Okay, show us, give us the data. How did you impact them? Where were they before? What did your product allow them to do? 12,000, okay, where are these 12,000? Have you counted them? Are they new, existing, right? So there's always the element of being able to demonstrate that impact. And a lot of people tend to have issues with that. So as you continue to grow, then you become attractive. And very quick question. People always ask about venture capital, right? People tend to say, you know, my business might be attractive to venture capital. So let me clue you in a little bit. Someone who does venture capital is essentially thinking, I want to give you 1 shilling and I want 10 shillings back in the shortest period of time. And I know a number of you are thinking, how? 1 shilling and you give me 10 shillings back. Why is it that they want 10x? Venture capital, what it does is it takes early stage risk. And when you're talking about early stage risk, we are talking about those risks where you either don't have your product market fit, meaning you've done your product. So for example, what we were talking about earlier, but it hasn't yet, you don't have insight from what the customer experience of your product is. There are so many aspects where you create the product, but how the customer experiences it or how they use it is totally different from what you anticipated. So it's understanding, is my product really suitable for my market? And then how am I going to scale it? So because venture capital comes in very early, probably when you're either what we call pre-seed, when you're still in the concept stage, you've done your proof of concept and you're just trying to understand if it works, to product market fit when you're just starting to onboard your first customers. Because of taking the risk where a lot of businesses tend to fail, they invest amounts in several companies. So you'll find they have portfolios of 10, 20, 30, 40 companies, and they spread across in the hopes that out of those, say 1 in 10 is going to give them that return. 1 shilling becomes 10 shillings, right? Because majority of these companies will likely fail or never reach a point of that takeoff, but venture capital is waiting for. So a lot of you, when you hear it's a venture capital investor who has asked you, can your business give 10x? It's because of the nature of the risk. So the nature of their return demands are also high. So if you look at your business model and realize, my business will maybe turn 1 shilling into 3 over 5 years, or 1 shilling into 2, then that is not the type of investor that you need to be targeting. So the point of having something like this is for you to understand, what type of investor do I need, or does my business need? And let me focus on that type of investor. Because if you go to the wrong investor, you'll end up spending a lot of time on something that was never going to work in the first place, right? If you want to go to Nakuru, you don't start by going to Mombasa, right? You want to get to Nakuru in the shortest distance possible. So don't try and, if your business is not for venture capital, if your business is not for impact funds, don't try and make the shoe fit, because at some point things tend to fall apart and you tend to waste a lot of money. So in terms of where we are and what we needed to do for our slides, we need to understand, remember financials, we are talking about, just to clue you in, how much money you need. You will need a slide that says, this is what I've managed to do. And we're not saying you go and reproduce your entire financial income statement somewhere. We're just saying you can say revenues maybe have grown from X to Y to Z. You provide a slide. Maybe you can say your margins are X if they're very good gross margins or net margins. If you're EBITDA positive, earnings before interest, depreciation, and tax, you can also put it there so that someone understands how you're doing financially. And then put projections, because those ones usually people will say, I don't go and talk about my finances, I don't want everyone to know. Put something so that we know our revenues are currently, you can just put the figure there, and our margins range between X to Y, but the projections are simple. We want to be able to hit revenues of X over the next 5 years. And remember, your projections need to be realistic. You cannot tell me you're doing 10 shillings today, a day, and then you want to move to 1,000 shillings maybe in 1 year. What is causing that growth? Because that's something the investor will want to understand. How are you moving from 10 to 1,000 in 1 day? Who are these extra customers? Is it the price is changing? What exactly is changing? You need to be able to walk them through that. You need to be clear about how much you're raising, right? It's always important to have it in your slides. I'm raising X for what? What we call the investment ask. I need 1 million shillings, brilliant. What are you raising it for? I'm raising it for 30% to go into this, 40% to go into that, maybe etc, So the other 30 to go. It's important to say how much you're raising and what it will go into. Even if you don't have precise figures, you can give percentages so that it's clear how the money is being divided and what it is being used for. Important to highlight, what will it help you achieve? right? We currently have 1,000 customers. We are only in 2 counties. If you give us this money, over the next 5 years, I can grow from 1,000 customers to 5,000 customers. From 2 counties of operation, I can be in the entire of Kenya, and maybe out of the 48 counties, I can be in 30. So that it's clear, other than what the money, the projections, other than the revenue that we'll make, it's also clear the impact on the business in terms of customer growth, whether it's your representation, whether it's products, so that in that one slide, we're able to see, okay, he wants to raise this is how it will be used, and this is what it will help him achieve or her achieve. And it's always important to say what type of capital you're looking for. So my last slide is on team. A lot of you are still early stage, so a lot of you are very founder driven, and you might be 2 or 3 people max within the company. What is an investor thinking of when they're thinking about the team? It's this circle here. How is that team structured to be able to execute? Because we can talk a lot, but at the end of the day, it's, are we able to execute the strategy that we're talking about? And what are the things people look at when they're talking about execution? For example, if you're in, say, early education, early childhood development, as one of you is, we want to see, do you have experience in education? Okay. Direct or indirect? Direct meaning you are either in the school system, in somehow a teacher, ran a school, or have a background in education or publishing. You know, your background, your experience, your track record is within that sector. If not, what else do you have that links you to that sector, that makes you knowledgeable about that sector? It's the same way, if you have a heart problem, you don't go to an orthopedic surgeon. Yes, they are all doctors, but they're different, right? One is an expert in the heart matters of the heart. Another person is an expert in the matters of bones, right? So the same way you would not go to an orthopedic person to give you cardiology advice, it's the same way an investor will not back someone who has no experience in that sector to develop a product for that sector. So that's why we always say, whenever you're thinking about your team, try and show these are the skill sets this business needs, and this is how that team brings those skill sets, because that's what the investor wants to know. I am backing you to do the cardiology part because you have some knowledge on that. I'm not going to bring someone who doesn't understand to do that. So that's part of showing the team. The other thing is, how connected are you within the value chain, right? What does this mean? Business is about networks. Who do you know, or how are you able to get or acquire your customers? How many of those are relationship-based products or businesses? You know, are you able to pick up a call and say, can I talk to the procurement manager of company X? How are you acquiring those customers if they are big businesses? Or if it's social media, if it's business to customer, how are you reaching out? Essentially, what an investor is trying to understand is, from your supply chain, from where you source your goods, to how you are able to create value, to how you're able to get it to the end user. How connected are you across that value chain? Do you have networks with suppliers? Do you have networks with maybe manufacturers? Do you have networks with your end consumer? Do you have networks with regulators? Do you have, so that they understand that you are not coming into a place where you are not able to sort out what your business model needs are. So that's one of the things that they're looking at. So that brings us to the slide of who will execute. You know how we usually have lovely mugshots, someone's face, X years. So we are not going and saying, write the entire biography. No, just say, my name is Diana Gichaga, right? 17, 18 years experience in what? Private equity, SME advisory, capital markets, asset management. What am I essentially saying? When it comes to matters finance and investment, I do have the track record. What is my role within the company? I am doing X. So within those few sentences, you can tell she is suitable for the role she's playing. She has a necessary track record and experience, and we don't doubt that they'll be, or she will be able to execute what is required. And then within that slide, you're also communicating why us. This can be a sentence at the bottom. Cumulatively, we have over 30, 40, 50 years experience, and we've worked together as a team before. So you're also trying to give an additional sentence that explains why you are the team to back within this particular sector. So I will pause here and just say, when it comes to pitching, you've been told you have 5 minutes, right? And when you've been told you have 5 minutes, it's important to understand that you need to be able to communicate in a way that grabs your audience. We have already agreed our slide deck has a maximum of 5 to 7 slides based on what we have described, right? What you need to do is ensure that in those 5 minutes, you're able to attract the interest. Remember, you will not pitch and someone writes a check. Even in Shark Tank and all those programs, the check is not written. Someone just says, I'm interested. And then the real work begins, right? So even when you're doing this pitch, right, the idea is to get someone to say, I need to talk to that entrepreneur. I think they might be onto something. So you're trying to communicate in a way that you're able to articulate your investment opportunity and create and capture that interest with the investor. So usually we will think about what's your memorable one sentence. It's just an interesting way of starting your pitch. And we usually say it can be a sentence, or it could be, as we saw before, and I'll play the video again. It could be the way Eric was telling us, do you know how much garbage we have in Nairobi? You know, paint the picture, let it be memorable so that even as I leave, I'll still remember, hey, I can't believe we have 10 tons of garbage that are produced in Nairobi every day. Quickly say we address this by providing 1, 2, 3 things, right? And how big that size of the market is, right? And how you're going to be able to address this market. We collect the garbage, we sort it out, we bail it, and we're able to deliver it to our customers. And then they pay us for that. Either they pay us per delivery, or they pay us on a monthly basis, or for example, if you're a tech, a lot of you are tech firms. How are you being paid? Is it subscriptions? So there's an amount that comes to you every month, or is it on demand when people are using your product? So it's important to understand how your business is actually making money, right? And what's the growth opportunity? We currently are only serving X clients. We would like to be able to serve Y clients. So you've already painted the picture of I am here and this is where I want to go. And then finally, as we said, what's the investment that I need, right, to be able to make this work? You give me that million for 10% to go into maybe the app development, 30% to go into maybe customer acquisition, etc. Then they will ask, okay, so why you? What we talked about, the team, your ability to execute, and then the next steps. We are currently fundraising. Please get in touch. Your last slide has your contacts, right? So you're able to communicate in a very short time what the opportunity is, what you're raising money for, and what the next step is. Don't try and go into the nitty-gritties of something, because sometimes as entrepreneurs, we love our product so much. We start talking and then we forget it's 5 minutes. So how do you make use of the 5 minutes? Don't talk for 2 minutes and then say, yes, I talked for less than 5 minutes. You've misused the time. This was your direct FaceTime with investors. They want to get as much information from you. So if you only talk for those 2 out of 5 minutes, what happens? There's a lot of stuff you've not communicated. So as opposed to try and understand what you've already said better, they'll spend those 3+ minutes trying to first see why you didn't talk about, So you're already on the back foot. Make sure if it's a 5-minute pitch, you're between 4 minutes or 4 minutes and 30 seconds. Just make sure before those 5 minutes, people understand what is your problem, how much, what is your solution, how much you need to raise, what it will be used for, and why you, right? And if you're talking and then, have like a timer somewhere. Usually when you're pitching, there'll be someone who just holds up something that says 1 minute left, 30 seconds, or there's a clock somewhere, or even for you, put a timer on your watch so that at 4 minutes, maybe your timer goes, then I have 30 seconds to wrap up. so that you're not being caught off guard. The 5 minutes ends and you are still here talking about your product. All well and good. You didn't tell us how much you want to raise. You didn't tell us what you need it for. And that's part of the key information that you need to do. So allow me to pause there. Because I can see I need to plug in, and there's some, and also time-wise, let me open it up for comments or questions and pause my video so that I can plug in, but go ahead. So anyone, please raise your hand or just unmute. We'll be happy to support. Yes, Tyrus, it was Tyrus, yes.
Thank you.
Yes.
I'm just having 2 questions.
Mm-hmm.
Yeah,
yes, please go ahead.
Questions.
Yeah. Mm-hmm.
Yeah. So the first question is, what advice or in terms of investment? There's this part that you mentioned on competitors, yeah. So
yes.
that you need to mention your competitors. So as we've been in a scenario where if we mention our competitor, then you realize that investors, they go slow just because we are a startup and they feel that the competitor is is a mainstream competitor. So what would you say about that? And then the second question is that what advice would you give to a startup that is growing too fast?
Yeah.
Growing too fast, but also need to raise some money, but we have difficulty in making choice the type of investors we need on board. Yeah.
Okay. Let me take one more question. I can see. Okay. Let me take one. Let me read one more. Okay, how we get what kind of, okay. So there's a question here. Okay, I think that will be for the Kenya team, what type of investors that they will meet. So there's a question from Edin. When it comes to investment structure, say you're raising about 50 million for 18 months runway. Okay, so that means the 50 million is supposed to take you for 1 year, 6 months. One investor comes in ready to commit, say 10 million and wants equity. Is there a standard formula of how to work out how much equity to give so as to reduce the risk on subsequent rounds? And is there a standard percentage that in founders should ensure they don't give out so that you don't end up giving away too much equity? Okay, so allow me to take those 3 questions. I don't see anyone else. So the first one was, when you talk about huge competitors, is it I saw a summary. I'm just trying to remember. Was Twiga in one of your competitors?
No. Actually, one of our competitors is Safaricom. So anytime you mention that to an investor, they clearly look at your pitch deck. They see everything is doing well, your projection, your finances. But now, when you're looking at the future of your company, they believe that you're going to have a lot of troubles with the main competitor. So, how do you deal with that kind of a situation?
Okay, so the fact that you've been able to have a product that is already attracting certain milestones, from what I understand, means that there was a gap that Safaricom was not able or is currently not able to fulfill that you're working within or you're addressing. So within that specific aspect, when you think about the telecoms industry, it is essentially Safaricom has a majority, and then we have other players who've come in, and their market share is not exactly growing at a very fast rate, but they are there. So for you, obviously, you can't go head to head with a very well-funded competitor like that, because they can throw money at a problem. But what they can't throw are certain things. The larger the company, the more bureaucratic it is, right? The more time it takes to be able to say, we are going to move left, we are going to make this decision, we are going to move in that direction. What you have as a smaller firm is the ability to address problems or challenges in a faster way and get your customer feedback faster. So maybe for you, the product you're developing is something that, yes, bigger competitors, even if it's not Safaricom, it could be the other telcos in the industry who might be interested in what you're developing. So what you're doing is you're setting yourself up to say, the person who will come and if you invest in me as an investor, my target is we make ourselves attractive for maybe the other telcos, right? Or similar people within the industry who, instead of them trying to do this product I'm doing from scratch, they'll essentially come and buy us out so that they are able to access that technology. So that having Safaricom, yes, of course, as a competitor, because it's key, you can't say you won't put it on the slide, because as an investor, I'll be thinking, why are you not putting Safaricom? And I'm immediately thinking you're trying to manage me. Put Safaricom on the slide, yes, but then argue your case and say, we are not planning to go head to head with Safaricom. We're actually making ourselves attractive such that if there's another player who needs what we are building, or even Safaricom themselves, so it's not something that they have done, right? There's nothing that prevents them from actually acquiring you. And Safaricom actually has a venture capital arm called Spark Ventures, and they've been investing in a lot of these tech opportunities, right? And the reason they're doing that is because they also want to be able to participate as investors in other tech things that maybe they themselves might not be able to do, or they feel might be of strategic interest. So that is how I'd be able to maybe position it, even if not for Safaricom, for a similar size or similar company within the sector. I don't know if that has helped with that particular question. Before I move to the next. Yeah. You're always attractive to someone, even if they're acquiring your company, even if it's, some people have said, instead of doing things from scratch, let's get money. And a lot of the companies and corporates are saying, we go and acquire, and that's some of the deals that we are seeing. Then the second is the question about you're growing so fast and you're wondering what sort of investors are there. So allow me to ask you a question. When you talk about growing very fast, in terms of your funding, do you have a lot of paying customers? Maybe if I can ask that.
Okay, yes. So when we initiated the program, just a pilot, a 1-year pilot test, we launched just angel investor who's brought in some what do you call it? Some form of a note,
A safe.
Yeah. So for the last 1 year, if you calculate the number of years that Safaricom has been in existence, especially in terms of their agency model, they're there for 15 years. So as within a year, if you calculate the number of agents they have, and if you calculate the number of our agency acquisition, it's growing so fast. That is even, we are feeling scary, a little bit scary, because we think that we are growing too fast. Safaricom has been here for 15 years, and they only have the total number of mobile money agents in Kenya is around 230,000. As we're able to almost get a quarter of that within a year. Yeah, so that is a bit scary.
Okay, so I'll tell you something. Usually there's something everyone knows about fast mover advantage. What they don't know about is fast mover disadvantage. Usually the company that starts something new, we always say they benefit because they're the first ones in the market. But you know what they're doing? They are making it easier for people to now follow in their footsteps. So as you're saying, probably Safaricom, the reason it took 15 years for them to get where it was is because there was that fast mover disadvantage. They had to educate the market. There's a lot of changes that they had to do, such that now when people such as yourself come in, what it took Safaricom 15 years to do is taking you a shorter time. So it's likely to do with the fact that someone has already paved the way, right? And usually that's part of the disadvantage. If you're the first person to do something unique, you make it easier for other people. So as opposed to them having to go through all the hurdles, they find that you've sort of made the way smoother. So I don't think there's anything bad to be said about growth. What I will say is, remember, at the end of the day, your idea of being a company is to ensure you have sustainable growth. And for you to have sustainable growth, you need people to pay you, right? So fast growth is usually not a challenge if you're very aware of it and you're able to start putting the processes and structures that we talked about. Remember, when we talked about investor readiness, is seeing what processes do I need? Like if I'm currently your team, we are X, our processes can handle, or our systems can maybe handle 250, say, agents. We are already at 125. There's a chance we might be able to even push past that number. Thinking about the system, thinking about how you engage with the agents. Do you have the infrastructure to start thinking about how to do that, so that you're not fixing it when you're at that number? You're starting to put in place the framework such that even as you grow, you're able to manage the growth. There's a phrase people use, a train going very fast and you're laying the track. So that's what fast growth is like. There's a train really moving and then you're trying to put the railway tracks, so the key thing is to try and stay ahead. Otherwise you end up in a collusion stage. So there's nothing wrong with fast growth, so long as one, you have the necessary structure, you yourself as the company put in the necessary infrastructure. If it's team, that means people, if it's physical assets that you need, and if it's certain maybe processes that you need to be already ready, focus on doing that so that you're not caught out. And then with fast growth, it's going to need money at some point, right? So start thinking about your fundraising now so that you're able to raise funds in advance of when you reach the point where typically the house is on fire. So start planning now, but fast growth is usually a very good thing. So well done for you. To the question about the 18 months runway, the key question was, if someone decides to come and give you 10 million equity, is there a way to calculate equity? Yes. There are various formulas to calculate the equity value of the company. But what you don't want to do, and I think this was part of your question, how do I know that I'm not giving too much equity? What you want to do is ensure that when you do your first round of fundraising, especially if people are taking equity, meaning they're coming in as shareholders, you don't end up giving such a huge amount of equity, and I'll put a star to that, such that when the next person comes to do fundraising, because you'll do your first, then your second, because the business will continue to grow, you end up in a position where after maybe 2 successful fundraising, you're actually a minority, a significant, like a very small shareholder in your own business. So rule of thumb is usually when you start your fundraising, try and aim between 15 to maybe say 20%. And this can be worked out with valuation, because valuation and the amount of money being put in, there has to be a relation. You don't just say it's 15%. and then maybe you've overvalued your company, or it's rare that you undervalue, it's mostly overvalue. So you need to go through an exercise to understand how to value, but the rule of thumb is try and keep it minimal below that, so that even if you have to seed another 20% later, you still have 60. What you're trying to avoid is a scenario where you're a shareholder and then you keep being significantly diluted. In very early rounds, you end up almost like an employee, right? With very minimal shareholding. So that's what we would say is key. I'm aware we are slightly over time. So what I'll do is I'll ask if I can just hand back over to the Kenya team. And maybe before we do that, I'd like to ask if it's possible, if we can switch on our cameras. Just briefly, I'd like to take a screenshot, if you don't mind, just of everyone. So just for us to do a quick screenshot. So I can do gallery. My communications person will have my head if I don't do this. So I had KPIs and it was written in red. So, oh, great to see faces. I'm so excited. Great, great. The rest, you know, it's a Friday. Even if you have your very colorful shirts, it's allowed. Oh, great. So can we show teeth? I don't know. So I'll say teeth and then I'll do function, or is it window print screen? So 1, 2, 3, teeth. Excellent. Brilliant. Thank you. Allow me to hand back over, but thank you. You guys have been wonderful. And I do hope that you've at least learned something today. Allow me to share the YouTube link for that young fellow who did an awesome pitch job, so that if you want to, if you want to watch it, I've also put just my email, in case you need to reach out. Thank you, everyone, and allow me to just say asanteni sana. Oh, sorry, 1 minute. Can we do the photo again? I've copied the wrong link. My apologies. Okay, just one more time with teeth. Gosh, Edwin Osnakel, you look like you're about to throw something at me. I may apologize. I copy-pasted too many times. Right? Okay, so we can do teeth one more time. Teeth. Yes, excellent. Okay, I think I have it. Perfect. Thank you. Over back to the Kenya team. Thank you very much.
Okay, thank you very much, Diana. I think we have learned so much. I think now people have an idea of what's coming up in the KIW. And I would say for the investors, we are anticipating to have most of the venture capital and also angel investors around. So I think most of them will be covered. And we're really excited. There's so much to be done. And I know ideally I've not shared a program of the session for the pitching that they'll be doing and maybe the program of the day, since it's still being worked on. So once it's done, I'll be able to share the same. And I'm really happy and excited you guys just came aboard. Despite me being a nag, I've been bugging everyone to come and be trained. You guys, you've really made me happy. At least 3/4 of the startup stand out, because I was taking account and I had 16 in attendance and 4 startups were not able to make it. That's quite a big and a good number. So I'm hoping that I'll engage you guys more in the remaining 2 weeks to come. I think we'll be having programs, we'll be having sessions to go to the place and see maybe how the setup is looking like and give you a feel of what you will be coming there after. So I'm
you
really
can let your colleague say hi if she wants to say hi.
Kelly, say hi.
Hi. They're the next generation. Hi. Oh,
Say
hi.
hi.
Awesome. Brilliant.
Yeah. So basically, I'm really grateful, Diana, for you coming in and helping out with the startups, because most of them didn't know what to expect. And I think you should share with me a template of the pitching decks that they are required to have, so that I can be able to share with them. I think that will be in order for them to know how to arrange their pitches, in which order, and how to be more presentable in that for the event. And I'll be sharing the recording for the training also after this meeting with everyone, so that at least guys can go back to the recording and listen to it, and maybe those who are not there can be able to have a feel of what you guys have had. So yeah, I think that's basically it. There's nothing much, unless Rose has something to say. I have Rose I'm working with. Maybe she might say a word or two.
I think I'll just reiterate your words. That was a very informative presentation. Thank you very much, Diana. And I hope the participants have managed to get the most out of it and will do the most at the Kenya Innovation Week. Thank you and have a good afternoon.
Okay, maybe since we didn't start with a word of prayer, I would request one of our visitors to finish for us with a word of prayer. Then we can call it a day, if that's okay. Awesome. Grace has raised her hand.
Okay, guys, let's pray. Dear Heavenly Father, we thank you for such a session as this. Thank you for giving us and adding wisdom to us. We thank you so much for Diana and even Carlos and Wanjiro, who have been so eager to teach us and to guide us through this process. Each of us has great ideas, divine ideas that have come from you, Lord, and we just want to do even better and impact more people who are around us and even beyond our boundaries. So we thank you for this direction. Lord, we pray even for that day that we shall be prepared, that we shall just go there with confidence and know what to say, and that each of us will live with a testimony that we have gotten what we needed. We bless this company, we bless everyone who's here. In Jesus' name we pray. Amen.
Amen. Okay, thank you everyone. I hope to be talking to you soon. Bye.
Thank you.